Dear professional friends, welcome to 6th episode of GST Weekly Updates. We are excited to see your overwhelming response to our last episode. So, thanks for the same. There is one press release dated 15th of February 2024 in which Department of Revenue has asked application for appointment of judiciary and technical members in the principal and state benches of GST tribunals. The portal for the same for application for applying for these positions will remain open till 5 p.m. on 31st March 2024. There is no other new notification, circular or clarification issued by department between last episode and this episode. Keep watching till end, as beforehand we will take up all queries, clarifications or questions received by us during this period. Now let's begin with critical case laws that are important for you, your client and for your businesses. Now let's dive into a landmark judgment by Delhi High Court in Cube Highway versus Assistant Commissioner CGST. A very important case to understand export of services in GST reported in 2024 NTN Volume 84 February Part 2. This case revolved around whether the service provided by Cube Highway to I-Squared Asia Advisors Pte Limited based in Singapore constitute export of services under the GST Act. The case background is that Cube Highway was contracted to provide advisory services to I-Squared, an entity in Singapore. The authorities alleged that the Cube Highway was an intermediary, thus disqualified for services as export. In this case, court noted that the agreement explicitly state that the Cube Highway acted independently and not as an agent or the partner of I-Squared. This was crucial in determining the nature of the relationship between two parties. The court analyzed the definition of intermediary under the IGST Act, says that clarify that Cube Highway provide direct advisory services to I-Squared and hence is not a facilitator or intermediary to the principal service recipient. In its decision, Delhi High Court concluded that Cube Highway's services were included as an export of services, rejecting the notion that they were acting as an intermediary. Implication of the judgment: this decision is significant for companies providing cross-border services. It clarifies that the providing independent advisory services to overseas client can be considered an export of services benefiting from GST supplies, GST exemptions. And the court concluded that this judgment is important to understand the contractual relationship between the service provider and recipient in the context of GST law. By this ruling, the Delhi High Court has set up a precedent for similar cases, ensuring clarity on the interpretation of export of services, specifically when department alleges them as an intermediary services under the GST regime. Now let's discuss a significant judgment by Allahabad High Court in the case of Associated Switchgear and Projects Limited versus the State of UP, an important decision relating to penalties in GST and reported in 2024 NTN Volume 84 February Part 2. The central question in this case was whether the adjudicating authorities could impose a penalty on the ground which was not mentioned in SCN and whether the Appellate authority could confirm such penalties. Background of the case is that the Associated Switchgear faced a penalty for alleged GST violations. However, the specific reasons for the penalty were different between the SCN and the final order. In this case, the court delved into the principle of odi alteram partem, emphasizing the right to be heard and the importance of adhering to the specifics of so-called notice. The Allahabad High Court found that levying a penalty on ground not mentioned in initial order violated principle of natural justice, and consequently it quashed this order. The implication of the judgment: in this judgment, the court emphasized the importance of fairness and transparency in administrative proceedings, specifically in tax-related matters. The judgment reaffirmed the necessity for authorities to strictly adhere to the ground specified in SCN, ensuring that taxpayer has a fair chance to defend himself. The court's rulings serve as a reminder to the fundamental principle of justice, safeguarding the right of taxpayer against arbitrary action by tax authorities. With this very important ruling of Allahabad High Court has set a precedent for the fair and just application of GST law, emphasizing the need to adhere to the rule of law. Next is another significant ruling by Madras High Court in Eicher Motors Limited versus Superintendent of GST, focusing on the intricacies of GST payments and technical glitches. Reported in 2024 NTN Volume 84 February Part 2. The core issue was whether Eicher Motors was liable to pay interest on GST amount deposited timely into the electronic cash ledger but not reflected due to some technical glitches. Background of the case was Eicher Motor faced challenging transitioning SANVAT credit to GST, resulting in delay filing of GST R3B. Despite payment of GST amount on time, the credit were not reflected in electronic cash ledger of Eicher Motors. In this case, the court observed the petitioner's plight due to technical glitches and consequential inability to file GST R3B return despite timely GST payment. The court analyzed the GST Act's provision emphasizing the payment process through GST PMT 06 and the consequent reflection in the electronic cash ledger. The Honorable High Court concluded in this case that Eicher Motor was not liable to pay interest as the tax was paid on the time. The delay in filing of return was due to technical glitches and did not equate to failure to the remittance of tax in time. The decision is very useful for businesses grappling with technical issues in the GST regime. It clarified that timely tax payment, irrespective of subsequent procedural delay, are compliant with the GST Act. This judgment emphasized the importance of considering technical challenges in the GST system and provide relief to taxpayers facing similar issues. With this very important ruling, Madras High Court has reinforced the principle that the technical glitches should not unduly penalize compliant taxpayers in GST framework. In another landmark decision of Allahabad High Court, Globe Panel Industries India Private Limited versus the State of UP, it addressed a crucial issue under the GST Act regarding the imposition of penalties and reported in 2024 NTN Volume 84 February Part 2. The case revolved around whether a penalty under Section 129 of the CGST Act was justified on the expiry of e-way bill without intention to evade tax. The background of the case is Globe Panel Industries faced penalties because one of their e-way bill has expired 10 days prior to the detention, raising question about the necessity of mens rea or intent in imposing penalties. The court referred to previous judgments highlighting the necessity of proving mens rea to establish the tax evasion, a crucial factor in justifying penalties under the GST regime. The court analyzed the expired e-way bill context, nothing that the consignee and the goods were undisputed and there was no evidence of repetitive use of e-way bill or intent to evade tax. The High Court concluded that the mere technical violation such as an expiry of e-way bill does not constitute sufficient ground for imposing a penalty in absence of intent to evade tax by SSC. This decision is significant for businesses dealing with GST compliance, emphasizing that technical lapses alone should not lead to harsh penalties without establishing intent to evade taxes. The judgment underscores the importance of considering the intent behind the action in GST cases, providing relief to businesses facing penalties for minor procedural lapses. With this ruling, the Honorable Allahabad High Court has set a precedent ensuring fairness in the imposition of GST penalties, balancing technical compliances with the principle of mens rea. Now let's examine another crucial judgment by Kerala High Court in Hina Medicals versus State Tax Officer, a significant case impacting the GST regime, reported in 2020 for NTN Volume 84, February Part 2. The core issue was whether ITC could be legally denied based on discrepancies between GSTR 2A and GSTR 3B form. Background of the case: Hina Medicals faced a denial of ITC due to differences found between GSTR 2A and GSTR 3B, a common issue faced by many taxpayers under GST. The court referred landmark judgment including the Supreme Court's ruling in the state of Karnataka versus Ecom Gill Coffee Trading and Calcutta High Court's judgment in Suncraft Energy Private Limited. The Honorable Court in the process analyzed very important fact for such cases. The Kerala High Court scrutinized the circumstances under which ITC can be denied, emphasizing the importance of not solely relying on the form's discrepancies. The court concluded that ITC cannot be denied merely because in GSTR form differences, directly re-examining of petitioner's evidence for ITC claim. And the court in this case directed to re-examine the petitioner's evidence for ITC claim. This decision is a relief for taxpayer, clarifying that discrepancy in GST form alone should not lead to the automatic denial of ITC claim. This important judgment underscores the need for thorough and fair assessment in ITC matters, assuring that taxpayers are not penalized for procedural discrepancies. With this very important ruling, the Kerala High Court has reaffirmed the principle of fairness in GST assessment, reinforcing the right of taxpayer in claiming ITC. And we all are aware that our clients and our businesses, we face such situations more often. So dear friends, now it's time to take queries. We have got multiple queries this time, and we request all audience to write query as detailed as possible so that the reply can be made in a good way. First query is GSTR 9 not filed, penalty notice issued. If penalty is imposed, can it be said that no need to file GSTR 9? No. Paying a penalty for not filing GSTR 9 does not exempt you from filing GSTR 9 form. The penalty is a consequence of non-compliance or late compliance, but it does not nullify the requirement to comply with the act. So this is very clear. Penalty does not mean that you have not to comply with the act for which the penalty is charged. Query number 2. If we pay GST on advance payment received against flat booking, is this advance booking under tax comes under taxable turnover? Because it is not my sale and it does not reflect as sales in the financials of my company. So we all need to understand that there is a difference between taxable turnover and turnover that become part of your financials. So, and that's the basic reason there is always a need of reconciliation between taxable turnover and the turnover. And the turnover per se is governed by the different act of revenue recognition, and taxable turnover is governed by the GST Act. So there will always be multiple situations where that will result into the difference between these two terms. So this turnover which you have taken as an advance will not form part of your turnover for financials, but for sure this will be part of your taxable turnover for GST purpose. Query number 3. Penalty is being imposed on 2A and 3B mismatch. Is there any circular so that an ex parte of cases and in appeal it may be filed as basis to waive of penalty? Many case laws are available to support the view that mere mismatch in 2A and 3B cannot be the basis of imposing penalty. We in the recent episode have also discussed one case of the fifth case of the similar nature. So that can also be used in this case. Goods accompanied with e-way bill but accompanied challan not signed by authorized signatory. This is a compliance issue. All valid documents need to be signed by authorized signatory according to the GST Act. But if this has been case and you have been penalized for such purpose, then if department want to penalize, then they have to look at the intention to evade tax, because there are so many high court judgments supporting you. If there is no intent to evade tax, then penalties cannot be, harsh penalties cannot be imposed in that case. Pre-authentication on challan by authorized signatory is missing. So there is no pre-authentication needed in GST regime. So I don't know from where this question is coming that pre-authentication is missing. There is absolute no need of pre-authentication of any document in GST regime. So these were all queries. Before we go and wrap up this episode, I need to add that notification number 6 of 2024 was issued on 22nd of February when we started recording this episode. So I want to cover this notification as well before we end. So the central government in this notification 6/2024 notified public tax platform for frictionless credit. This is a new concept. This platform for public tax platform for frictionless credit is created, developed and conceptualized by Reserve Bank of India, and it is developed by one of the subsidiary of Reserve Bank of India, and this is a platform which will be available for the entrepreneurs for through the API integrations, and more information for this tax platform will be available in few days, and when the information will be needed, we will be covering that in these episodes. Thanks for watching. Don't forget to like, subscribe and hit the notification bell so that you does not miss out our next episode. Please share your valuable feedback and ideas to improve and make it better and useful for all of you. The one more suggestions that I am getting, if you need some specific cases to be covered which may be beneficial for your practice and for your clients or for your own business, please write back to us. We will try to include that in the next episodes. Thank you. Keep agile till next week and stay connected for more such episodes.